Hello there, and welcome to Executive Suite. We're here today with Alik Sokolov, co-founder and CEO of Sibli, which is at Sibley.ai. If you want to visit their website, find out more. And we're going to start off with Alik telling us about his company. Alik, please go ahead.
Great to be here. So Sibley, we're a generative AI, vertical AI company. We work with institutional asset managers to help them really from two different directions. So one is in terms of helping them improve their investment process. So especially when it comes to teams of investors that do a lot of work with models they're very deep in terms of the forecasting process. We help them um, understand their historical forecasting decisions. We help them um, align data across their forecasts and more easily understand, for example, how their particular um, predictions or estimates during a given time compared to consensus, as well as we help them improve the efficacy of their investment research, so the quality of the research itself. So that's by using generative AI to produce effectively reports for them that are more aligned with their views, with what's already in their models, and with their investment philosophy.
Okay. So what sorts of things are they forecasting anyway? Like earnings, or are these
Yeah,
like
yeah,
macroeconomic forecasts? What kind of forecasting?
Yeah, that's right. This is more sort of at the equity level, so public or private equities. Think you can think maybe more generally of making capital allocation decisions based on a prediction, right? So this in the public equity space, probably the easiest place you can understand this, where you have a analyst that covers Apple. The analyst for Apple tries to predict what the earnings of Apple will be, and typically they'll do this by breaking that more abstract concept that's kind of hard for them to reason about into pieces that are maybe more predictable and easier to think about. So what are the business segments, right? For example, hardware sale versus Apple Store sales in different geographies, and ultimately sort of the number of widgets produced multiplied by the cost of the widgets, right? Like number of iPhones by the cost of the iPhone. We live in this world where there are all these kind of granular predictions that aggregate to a higher level predictions like predicting earnings. Um, Most of our work today is institutional asset management, but in the long run, we at Sibley think that we can help all manner of capital allocation decisions, not just those made in public or private equities.
Hmm. And are you helping funds make both long and short decisions?
Yeah. So ultimately, I mean, we work with asset managers who have all sorts of different strategies, right? Like in terms of sort of the value chain of investment management, um, we do less work, let's say, on the portfolio management side of things, right? Like we're much more about efficiency process, potentially generating signals or data points for investors to make higher quality decisions quickly. How they utilize it can end up on the longer short side.
Okay, so you're just sort of replacing a room of 50 researchers with one researcher. Is that it?
Well, more like, making 50 researchers much significantly better at their job than the other researchers they're competing with, in some other fund.
Okay, so um, AI is really just a tool. You're not using AI to say buy a certain stock, like buy
No, no, we
Nvidia before it went up 700%.
no, we yeah, we are not certainly, right? Like we're earlier in the value chain before that decision gets made. But we help investors make that decision more effective with a higher degree of confidence in a lower amount of time spent to get to conviction.
Okay. And how do you do that? Do you have some kind of proprietary software, or is it a web app, or how exactly are you helping your institutional managers?
Yeah, that's right. So it is proprietary software. We deploy typically within our clients' environments. So in their virtual private cloud, because we work with data that is highly sensitive. usually, right? So we incorporate all manner of data, including external data, web, news, etc. But we also work with data that's internal on their side, right? So their own research to um, potentially produce information that is more aligned with their views as well as additive to what they already know.
Okay. So so basically, none of their sensitive data resides on your servers. It's all on remains on their servers.
That's right.
I see. So then, does that mean then you don't have to be certified for security or anything like that?
Um, well, I mean, as a young startup, right? Like it does mean that there's, for example, less pressure for us to have something like SOC 2.
Hmm.
Um, but on the other hand, of course, our platform still needs to be secure, and we need to meet the internal compliance guidelines of the clients that we work with.
Interesting. Okay. So one of the things I'd like to do is just pick your brains for a second here on AI and this kind of research for investing. Um, to your knowledge, did any AI model predict that Nvidia was going to go up 700% in 1 year?
Um, I think that question is a little bit ill-posed,
Hmm.
right? When we need, when you think about an AI model, right? Um, an AI model needs to be evaluated across a broad range of predictions to try to understand if it has lift, right? If it's able to make predictions, at least better than random. Ideally, sufficiently better than random, so a strategy can be implemented using that model that can generate money, right? Expected value, money and expectation over a period of time. And that's the case in finance. That's the case really in any field where machine learning gets applied, right? So I'm sure there are models that have predicted that Apple will, go up by a lot, and I'm sure that there are models that did that with some degree of lift as well. Um, and but a model could predict that this is going to happen and be a terrible model because you know like if you just randomly guess how much Apple is Apple or Nvidia or any stock going to go up over a period of time, you will sometimes be right and sometimes be wrong.
Yeah. I was just wondering because, these big firms like BlackRock, they have people with PhDs in math and physics and computer science. They must have whole departments doing exactly what you're doing, right? And trying to exploit AI as much as possible to increase their returns. But to my knowledge, um, no one really has been able to quit their job and just sort of ask AI, what should I put my money into? Because you wouldn't have to work for a living if you could just get some kind of
Oh, yeah.
advance notice which stock's going to go up 1,000% this year.
Yeah, that's right. I mean, it's a highly competitive space, right? So certainly, and even if, let's say you are on a quant team within a large asset manager, um, let's say, a top hedge fund like Millennium, right? You might be able to make money there, but you have a lot of infrastructure tools, a lot of data gets purchased, right? So your ability to replicate that on your own, or even by starting up a new fund, may be a lot lower. Um, it's certainly a competitive space, right? We at Sibley, right? The reason why it makes sense for even large asset managers to buy our product is because we've undertaken time to engineer around certain problems that are either difficult or time consuming, sufficiently time consuming to solve, where even some of these largest managers have not cracked those particular problems. So, but that's the case with any company selling to any small startup selling to an enterprise, right? That's always going to be the case, generally speaking, right? Like there's something that the startup is doing that there was not enough organizational energy to solve. for whatever reason, right? Like maybe it's just too big of a problem and it requires significant enough engineering resource and significant enough time where even for large enterprises, not that they don't have the sum total of resources to solve the problem, but um, given all of their competing priorities, the problem is, not sufficiently large or important, or the cost benefit just isn't there to solve it. That's, I guess any startup will survive by finding those problem spaces where that's the case, right? Any B2B startup or B2E startup.
Okay. So in the past, these money managers, they had to have, there's CFA designation and just sort of be experts on traditional analysis of different stocks and funds. And I'm wondering, with the rise of AI, is that job going to be taken over by people who have more of an engineering background and understand the technology? And like, if you don't know how to exploit the new technology, the fact that you went and got an MBA is going to become irrelevant. What do you think of that?
I mean, I think it's just really hard to forecast forward. For me at least, like which skills are going to become more in demand, because as much as I can do the work of an MBA in terms of reading a disclosure or in terms of writing a well-structured email, it can also increasingly do the work of an engineer, right? And so it's sort of like asking the question of like, really, where are we as humans in the knowledge workspace going to have an edge to add, right? Because ultimately, like the competition isn't like human versus AI, right? It's like human with AI versus AI. It's like the chess example, right? So like computers got really good at chess, right? Today, there is very little that a human has to add when it comes to like a move recommended by an engine for whatever. In pretty much any position in chess, like the engine is just gospel. Even though they continue getting better, and we're making engines that like refute moves from inferior engines, they have long since went into the stratosphere for where humans have just anything to add to a conversation. But for several years, as engines were improving, like when Gary Kasparov, right, like famously lost to Deep Blue, etc., the best chess entity would have been a human with a computer, right? Humans had better long-term planning, a better strategic understanding. Computers were better at more tactical play, right? Like short sequences of moves. Um, and as those, well, not AIs, right? But as those algorithms improve, um, eventually, right, the best entity becomes just the computer, right? And it's possible that with AI we'll see something similar, right? So and I think this will be different for different jobs and different skill sets, right? Like, certainly AI is already adding value pretty much in any area of knowledge work, right? Certainly, you're a better programmer if you're proficient at using AI tools. You're a better analyst if you're proficient at using AI tools, and potentially using AI tools that are tailor made for your workflow, like what Sibley provides, for example. Um, at what point does it just become like, oh, AI can just do this? I think we're a while away from that. And then how quickly that happens for different jobs, to the beginning of this point, is I think is just really hard to predict. Um, but I think the case for now and for the foreseeable future seems to be that in engineering, for example, AI seems to be a ways away from reliably um, writing its own code on enterprise software and submitting like a pull request that then reviewed and merged by a human. This all happens with a high enough degree of efficacy where humans can start cycling out of this process. But yeah, when it comes to like, if someone should be going for an MBA right now or an engineering degree, it's really hard to know which will get disrupted harder and faster as AI continues to improve.
Hmm.
Hmm.
Now, the type of things that you're using AI to analyze, are you using it on both disclosure um, and quantitative analysis, like graphs and charts and
Um,
stochastic
so so we're sort of
analysis?
less kind of vision focused, right? So think ultimately like the main data structures that we work with are going to be textual, right? So just unstructured, including disclosures and earnings calls, etc. They're going to include a lot of just sort of agentic or workflow types of work, right? So setting up, basically complicated analyses using agent chains of Gen AIs, Gen AI models rather, and internal models to Sibley that we fine tune, as well as ultimately working with the forecast that analysts produce, right? To be able to surface research that's more additive to them, for example. Again, by kind of connecting down to, well, how did they forecast something?
Mm-hmm. Now, when I want to look something up, either on the SEC website or on the Canadian CEDAR website, I have to put in the name of the company and what kind of document I want to look at, and I have to go through all these steps in order to finally get the information I'm looking for. So have you, with your AI, does your AI program have to go through all those steps to look up like to look up a 10K on a specific company on the SEC website?
Well, so that's generally not a problem that we're solving, although there are a lot of other companies that are looking at these sorts of things, right? Like the, Alpha Senses or the Robos of the world. Um, Generally speaking, the there's many ways to solve this problem with Gen AI, right? The limiting factor becomes, in my view, especially for enterprise use, what gives you a higher degree of quality, right? Like what actually gets you something production ready that can solve these types of problems, right? And so from a product is like sort of AI product design perspective, the way that I see it, at least, to design really good Gen AI products, one should look for ways to add a lot of value or maybe to solve something general while actually limiting or narrowing the scope of what the for what AI models have to handle, right? If that makes sense, right? They're sort of very general. They can do a lot of different things, right? And frankly, you can just like you can type in like, hey, how do I solve world hunger
Mm-hmm.
into ChatGPT, and it'll give you an answer. Um, right? For that, probably the answer will not be so great because it's too complex of a problem
Mm-hmm.
for to be solved in one prompt or
Mm-hmm.
one set of agent calls. Even with the best models currently around, right? The O3 Pros or the equivalent versions of the reasoning model integrated with agents and all that stuff, and tool use. So you need to simplify, you need to break down, and then it becomes a product design issue, right? So how do you break down in your problem into manageable pieces that can work with a high degree of efficacy and can still do something useful? That's
Mm-hmm.
that sort of becomes the gist of it, right? So the example you used um, is not really a problem that we tackle because the way we see it is, for the most part, like the cost benefit is not that high. There's a lot of brittleness to solve for. That data is available through other means, or a lot of that data is, at least, right? Like the fundamentals are available as structured data. They have been for a
Mm-hmm.
long time. Um, so
Like
solving the
the
problem of,
XBR format, I guess they call it, right?
well, I mean, and it's
Yeah.
available in Bloomberg
Mm-hmm.
and it's available in Capital IQ. Like it,
Mm-hmm.
like people have already parsed out the financials,
Mm-hmm.
and provided it to our users, like the
Mm-hmm.
institutional asset managers, and in a
Right.
structured format. So reinventing that wheel is not so
No,
useful if you're working with
yeah,
institutional
not worth it.
managers, right? Like
Mm-hmm.
if you're building a product for like retail investors, right, who don't have access to Bloomberg, right? Well, that's a different thing, right? And like maybe potentially, right, like reparsing financials actually becomes useful to do. And Gen AI maybe actually stands to commoditize some of the some of this data, and maybe that'll be a good thing for the ecosystem because it tends to be quite pricey. But again, that's not a problem space we play in. We don't try to not reinvent that wheel.
Do you have an example of like that you would use maybe in a sales pitch of one of your customers realizing some kind of a a big win using your system.
Yeah, well, I mean, for specifics, not really because the industry is so secretive, right? But the
Mm,
bar we use is, for example, can we produce a piece of research that is additive, right? At least from just a subjective evaluation perspective for an analyst in a buy side firm, which is a high bar because they're served by the sell side, right? So they're served by brokers who are spending human time and also increasingly are enabled by tools like generative AI to try to give them better, fastest, most thoughtful piece of research to drive their sales volume, right? Like the on the institutional side, I think, and be it systematic or fundamental strategies, ultimately, I think it's similar in that every service provider, every data provider is a piece of the puzzle ultimately, right? Like you're generally not going to be saying buy this or sell that. To your earlier question, right? It's more about additivity, right? Like make them can you help them arrive at a higher quality decision, right? Give them some kind of edge. If you can, then they'll be happy and there'll be money to spend for that type of value add.
right. So, do you? Uh, so you're not doing the traditional quantitative analysis people can already get on Bloomberg, and I guess like you're not looking at insider trading either. Um, you're assisting these analysts with doing some kind of deep research. Um, is that
Yeah,
a
yeah,
good
effectively, right?
summary?
You can think of it that way, right? Like in a
Okay,
lot of ways, it's like, yeah, like, and same, deep research is like a feature name that, for example, OpenAI has,
right.
I guess, popularized, right? So you can think of it that's a good way to think about it, right? Like
Yeah,
deep
okay.
research,
But
very specialized for institutional asset managers.
but there's something I want to know, not particular to Sibley, but particular to AI and investment research. Every time I'm on Instagram, it seems that every other uh, posting I'm shown by the Instagram algorithm is on some new AI investing platform where they say, oh, you should deposit $100,000 in this account or sign up to use our system here. And my impression is they're usually based on some kind of momentum investing thesis. Do you know much about those? And, they're promising sometimes huge returns or even just like 7 or 8% a month, which is pretty good, right? Do you know anything about that? Are they snake oil salesmen or is there something to it?
I don't know much. Certainly sounds
Hmm.
pretty snake oily to me. That's also not my social media experience. Clearly, there's something about about your customer embedding for Instagram that
Hmm.
makes it think that maybe it thinks you have a lot of money. No, I'm not super familiar, but no, of course, right? Like at the end of the day, like generating alpha is a very, very high bar. I mean, even institutional asset managers, right? Generally, there's a lot of research to show that even for top hedge funds in the world to make alpha consistently year over year is a tall undertaking, and it's very, very difficult to and rare to do year over year. Um, so to the extent that somebody has like a really good strategy like that, and it really works, they probably wouldn't be marketing it on Instagram. Right? There's better ways to make money with something that can print, 7 or 8% a month you know, without taking on undue risk, right?
Yeah.
So
Well,
yeah,
they're not
Mhm.
investing based on fundamentals. I think it's all just chart analysis and momentum investing where they use AI to just look at 20,000 different stocks that are trading at any given time and figure out which ones are going up the fastest
yeah,
today.
yeah.
Um,
Well, I'm
you
any
know,
any any quant, right? Any
hmm
any hedge fund, right? Like that's what they do,
hmm
and they're not printing that kind of money.
mm.
So are these firms that much smarter than the people doing this job at
You
at
have
you know
billions of
at a
dollars
millennium?
and can
Um,
hire people
Probably
with
not, right? And they
PhDs
probably
from
have less
MIT.
resources.
Yeah.
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 Um, so yeah, that's also like you do have to there's a lot of, there's a long, rich um, theory and history of understanding risk and return in financial time series, right? There's this the way people think about risk, for example, in terms of risk models or factor models, like Barra being the famous one, where basically, like generally speaking, right, unless you really have some clever idea that is, quote unquote alpha generating, right? Alpha generating meaning that it's not part of a risk factor, right? That it is excess returns over and above what kind of traditional risk return analysis would would lead you to. But generally speaking, right, like you can increase your expected returns by taking on more risk. The easiest way to do that is just leverage, right? Like you buy a bunch of S&P calls, um, and you do that with a lot of leverage. Your expected returns will be very, very high, but of course you can just get wiped out, right? So that's sort of generally speaking something that's like, oh, the return is really, really high. This is great. Smells like, well, there is also risk, and the risk sometimes can be hidden, right? To your point, it can be like risk, like momentum is a known factor,
Hmm.
right? There's maybe flavors of it, and you can try to get a little bit clever to squeeze something out from momentum that others aren't seeing, which is, debatable how much you can do that, at least in reasonably well covered equities these days. Um, but yeah, so that's sort of like the return is one side, but what is the risk profile? And what kind of risk is it ri- what kind of risk is this return compensating you for?
Yeah. Well, so getting back to NVIDIA again, I'm just wondering, clearly when these things happen, you see a stock go up like that, they always seem to make perfect sense in retrospect. And I ask myself, why didn't I think of that? Like how come I didn't jump on that bandwagon earlier on? Now it seems to be a bit late. Maybe the train has left the station there. But Will, do you think that in the near future that AI will have that kind of predictive capability to be able to tell somebody that this stock or that stock is going to go up like a rocket, and here are the reasons why you should buy it now?
I think maybe it's worthwhile to dig into what this prediction problem really means. Um, there's at least a couple components to it, right? So the first one is the future cash flows of NVIDIA, right? So ultimate, like from a sort of classical finance theory, right? You could think of the present value of NVIDIA as a discounted value of its future cash flows, right? So that's kind of net discounted cash flow analysis. Um, and you might say, okay, well, like let's say we have an oracle, right? Like so, like a perfect model that can predict these future cash flows, right? And you have an oracle to say what is a fair discount rate. Then you could just value NVIDIA and say this is the fair value of NVIDIA today. If it's below or above that, we should buy it. But the challenge is that, of course, there's no such thing, right? Like there's no such thing as a perfect prediction with current information. You could have a super intelligence tomorrow, and there would still be uncertainty, right? Because the world is just random. It's just stochastic, right? Like we don't
Yeah,
really know what's going to
sure,
happen.
there could be a war or
It is of
something.
course debatable, right? But I would view, right, like that it's just not a completely predictable problem. So you can start talking about, okay, well, maybe we can accurately model the distribution, right, of these things, right? And so that maybe gets into something more realistic. Um, then the other challenge becomes that, well, what is the price of NVIDIA, right? So given that nobody really knows what's going to happen, the price of NVIDIA today, you could think of it as sort of a consensus, right? So you could sort of think of it as a consensus among many different investors of like what the future cash flows of NVIDIA today will be in the future, kind of, sort of, right? And also we know that in a lot of ways, the markets kind of sometimes get disconnected from this purely fundamental view for, a variety of reasons, right? So you sort of have this psychology in place, right? Um, so the problem really then becomes like, how do you predict the consensus on this highly uncertain, highly unpredictable thing into the future, right? So in that sense, it's sort of it's too much to expect, I think, from
Oh,
even from a very clever AI system, um,
mm.
to tell
Well,
you what's going to happen.
okay.
Certainly, like to identify a mispricing, and that, but we already have AI that does that, right? Like with that, Gen AI is helping, right? And Gen AI is being used to improve all sorts of machine learning or AI-based prediction systems that are trying to make alpha in the markets, or that are trying to, make it more efficient to forecast or predict the value of a private equity company, or maybe down the line, even a company like Sibley, right, at its early stage. And sort of like the less data there is, the more pressure sort of there is on the more AI components of it. And you can kind of rely so much on historical information, right? Like what sort of how has Apple evolved in the last little while. So, but long story short, it's just that it's an incredibly difficult problem. That yeah, a lot has to happen before AI can. Again, this sort of goes back to like humans with AI versus just AI, right?
Hmm.
Like it's a highly competitive space where smart humans are competing against each other, with access to all of these models and with access potentially to more sophisticated tools that are built using these models to solve specific problems tailor made for these investors. Um, and it'll be a while until you sort of say, okay, well, just an AI is like better than
Hmm.
the some reasonably smart or very smart, very well resourced humans competing against each other in this zero sum game.
Yeah. So, and I guess you'd have to have access to a lot of social media data probably to make those psychological predictions. So, and a great example was GameStop, which
Hmm.
went from something like $1 to $350 because
Mm.
of people on Reddit and other social media platforms just agreeing to drive the price of the stock up. And so you get enough retail investors that 1 million retail investors get together and go and buy $1,000 worth of stock each. They can drive these stocks up to the moon. So, but who has access to that other than, Facebook? They have access to their own data. X, Elon Musk has access to that data, but no one else does. So if there's, like hundreds of millions of postings and communications every day on X, you and I only see the ones that make it to our account if we're paying any attention at all, right? But those companies would be able to, I guess, use AI to read all of that data and take the temperature of the market, as it were, and try and predict where things are going to go based on that sentiment. Do you think that's a possibility?
Well, I mean, they sell data feeds, right? Like they're not the only ones with access to social media data because in part it's sold to them, in part a lot of it is exposed to the web, right? So it's not so much that they have like an information monopoly. Um, it Social media can certainly be a piece of the puzzle, but it's only a piece of the puzzle, of the mosaic that goes into forming a strong view of what the future cash flows for Nvidia will be, right? Like there's a lot of information within the fundamentals, within what the street, so what researchers and sell side firms are forecasting, within what's being said in financial news, and what's being captured by analysts internal to a buy side firm, and right, like the mosaic is truly vast. And
Mm.
social media, it's a piece of it, but it's
Would
arguably a small piece.
Yeah, I've got one more question, I guess, before we wrap this up, which is if I could feed say a prospectus into an AI system and ask it to go out and do deep research on every statement made in this prospectus and tell me if there's a falsehood, even just
Mhm.
one, in this 150-page document, is that something I could use AI for?
Yeah, Yeah, and it would have some degree of efficacy just out of the box, right? And then again, not a use case that we focus on, but companies like Sibley, right, would be focused on, okay, well, how do we get an edge, right, and get a higher level of quality to for this particular use case, right,
Well,
and sort of just becomes
so
like,
I might have
um,
just found a new customer for you, class action lawyers.
yeah, 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 potentially. Well, again, all of these spaces are going to be pretty competitive. Yeah, I might have some other companies to refer to you if you
So,
have class action lawyers that are in need of AI help.
well, because I'm pretty sure they are employing researchers who are just combing over all these prospectuses and 10Ks and trying to find just one
Absolutely. And I mean,
misstatement.
there's like Harvey is one of the Harvey AI, right, is one of the most well-funded startups in recent memory focused on legal AI, right? Like a great Canadian company called Arteria. Some comes from a bunch of us are like ex-Deloitte. Arteria was sort of born out of the same time when we were doing a lot of deep learning work
Yeah.
within Deloitte, right? So also works on the space. Yeah.
And
So
what,
it's
yeah, what are they doing exactly?
So Harvey and I know a bit less about them as I understand it, right? They do
Uh-huh.
legal AI tech basically, right? So just agentic AI for all sorts of legal use cases, working with large law firms, right? Arteria, their kind of specific focus is much more on sort of document management. All right, I think they started out kind of in the contract management world,
Hmm.
and now are much more sort of just general document management and understanding and controls for large enterprises. So all the reality with AI today is it can do just about anything. Like a few years ago, right? Like we're at the point of of machine learning where it's like you had to like really think about like, okay, is this even a problem in knowledge work that we should be solving with AI? Nowadays, like it doesn't really matter. Like if you can sort of describe it, right, and it's like to do with like textual data or data that like lives within a computer that's like reasonably well structured, or not even reasonably well structured, right? They're just like readable by Gen AI models. This problem can probably be solved. Sometimes maybe it can be solved in a way that's too brittle, makes too many mistakes, and you want to improve on that. But yeah,
Hmm.
it sort of in that way it's a little bit boring, right? It's like if you ask can it be done, it's like yeah, it can be done.
Yeah.
It's just a matter of like how well and how costly it is to get it to be done well enough.
Yeah. Well, the reason I asked that question is because at the back of my mind, for the last few minutes, there's been a situation that I don't know if you recall. There was a short seller named Muddy Waters. I don't know if
Mhm.
they're still around or they've changed their name. And there was a company, I think it was called Sino Forest, and they managed to figure out that this company was claiming to have more timber licenses in China than all of the timber in China put together. So it seems to me that might be the sort of thing that this sort of AI research might have detected. If you said, is there anything wrong with this story? They might have been able to look up somewhere, some geological survey, how much timber is available in China and compare it to what this company was claiming and find out that they're just not telling the truth.
Yeah, yeah. So this is actually a great example of that, right? Like so put it into, deep research right now, like that sort of question, right? And you'll get an answer. Um, Whether you'll get a good enough answer in one shot, right? So like if it'll just work and the answer will be of high enough quality to action, um, hard to say, right? But this is sort of like this is where uh, Sibley makes our money, right? It's just sort of finding these problem spaces that are important to institutional investors, and if it works out of the box, just use the out of the box model. Well, if it doesn't work out of the box, then there's some engineering to do that may be not economical to do in house, or you don't have the organizational energy to do in house. And that's potentially an interesting use case or an interesting product for a company like Sibley, right?
That sounds
Getting
great.
this to work
Okay.
well enough.
Okay. Well, if any money managers are watching this and you want to find out more, go to Sibley.ai. I want to thank Alik for coming on to the program and wish you the best of luck with your venture. And did you have anything you wanted to say as we close up?
No, great to be here. Thank you
Good.
for the time. Enjoy the conversation.
Okay. Well, thank you very much. And take care. Bye for now.
You as well. Bye for now.